Hey there, have you ever wondered how some people seem to thrive financially during a recession while others struggle to make ends meet? In today's world, the economy can be unpredictable, but that doesn't mean you can't take steps to protect your finances and even thrive during a recession. Maybe that's the reason you're watching this video. So if you want to learn how to be rich during a recession in 2023, keep watching. Recessions can be a challenging time for everyone, with businesses shutting down, unemployment rates rising, and stock markets sinking. However, with the right mindset and strategies, you can take advantage of the opportunities that arise during a recession and come out on top. In this video, we'll explore some proven methods that can help you protect your finances and even increase your wealth during a recession. So whether you're an expert investor or just starting, let's dive in and learn how to succeed during tough economic times. Let's first talk about the meaning of recession for those who are new to this topic. In simple terms, a recession is a period of economic decline that occurs when the gross domestic product, or GDP, falls for 2 consecutive quarters. When this happens, businesses slow down or shut down, unemployment rates rise, and the stock market plummets. Recession can cause a significant financial strain on both individuals and governments. What causes a recession? Recessions are typically caused by a combination of factors, such as a decrease in consumer spending, a decrease in investment, a decline in international trade, or a decrease in government spending. These factors can create a downward spiral that can cause an economic downturn. It has huge impact on businesses. During a recession, businesses often experience a significant reduction in demand for their products and services. This can lead to decreased revenues and profits, which can force companies to lay off employees or shut down completely. Small businesses are particularly vulnerable during a recession as they often lack the financial cushion to weather economic storms. Recession can also have a significant impact on individuals. Unemployment rates rise, making it more challenging to find a job, and people may have to accept lower-paying positions to make ends meet. Consumer spending decreases, leading to a decrease in the standard of living for many people. Let's not forget the stock market. The stock market is often considered a leading indicator of the economy. During a recession, stock prices typically fall as investors lose confidence in the market. This can lead to a significant loss of wealth for individuals who have invested in stocks or mutual funds. So, how do the governments respond to this? Governments can take several steps to try to alleviate the impact of a recession. They may implement fiscal policies such as tax cuts or increased government spending to stimulate the economy. Additionally, they may implement monetary policies such as lowering interest rates to encourage borrowing and investment. Recessions can be a time of financial security and uncertainty for many people. But what if I told you that you could not only protect your finances, but also increase your wealth during a recession? We'll show you how to be rich during a recession in 2023 by sharing some strategies that you can use to thrive financially during tough economic times. Number 1, cut back on your expenses. During an economic recession, it's crucial to be mindful of your expenses and cut back wherever possible. This involves taking a close look at your monthly budget and pinpointing areas where you can reduce spending. For instance, you could opt to cook more meals at home, unsubscribe from services you no longer use, and search for cheaper utility and insurance providers. By cutting back on expenses, you can save up money to invest in opportunities that arise during a recession. Moreover, it cultivates the discipline and habits needed to manage your finances effectively, which will eventually pay off in the long run. The renowned investor Warren Buffett underscores the importance of living below your means. He famously said, "If you buy things you do not need, soon you will have to sell things you need." Living frugally and below your means allows you to accumulate wealth over time and capitalize on opportunities when they come knocking. In a recession, scaling down on expenses is paramount. When money is tight, it's essential to focus on essentials and cut out any unnecessary expenses. This approach frees up funds that you can channel towards investments that hold their value or setting up an emergency fund. One way to cut back on expenses is by creating a budget and pinpointing areas where you can reduce spending. You may consider trimming down entertainment expenses, discontinuing unused subscriptions, or cooking meals at home instead of dining out. Warren Buffett, for his frugal lifestyle, also once said, "Do not save what is left after spending. Instead, spend what is left after saving." By prioritizing saving and cutting expenses, you can establish a solid foundation for long-term wealth creation. Number 2, build an emergency fund. During a recession, having an emergency fund can be the difference between financial stability and turmoil. It's like having a safety net to catch you in case you fall. By building an emergency fund, you can protect yourself from unexpected expenses, job loss, or economic downturns. Plus, it can give you the confidence and financial freedom to take advantage of opportunities that arise during a recession. So, how do you build an emergency fund? It's simple. Start by setting a savings goal based on your living expenses. A good rule of thumb is to have at least 6 months' worth of expenses saved up. This may seem like a daunting task, but you can achieve it by consistently setting aside a portion of your income each month. You can also consider investing in low-risk liquid accounts, such as a savings account or a money market fund, to maximize your returns. Even Warren Buffett, the Oracle of Omaha, emphasizes the importance of having a cash cushion. In his 2018 letter to shareholders, he stressed the need to maintain financial strength by operating with at least $20 billion of cash equivalents and avoiding short-term debt. By following Buffett's advice and building an emergency fund, you can position yourself for long-term wealth creation and financial security. So, start building your emergency fund today and prepare yourself for any financial storm that comes your way. For number 3, invest. During a recession, the stock market tends to take a hit, but this can be a great opportunity for savvy investors to purchase stocks at a discount. Warren Buffett once advised investors to be fearful when others are greedy and greedy when others are fearful. Essentially, this means that when the market is down and everyone else is selling, wise investors should buy. However, it's crucial to conduct thorough research and only invest in companies with a strong financial position and a proven track record. It's also essential to maintain a long-term investment strategy instead of trying to time the market. As a short-term volatility and earnings struggles are typical, Buffett always recommends keeping a long-term perspective in mind. This means that investing in companies with strong fundamentals could result in improvement and could drive record earnings 5 or 10 years from now. But it's also important not to make things more complicated than they need to be. For most investors, investing in an index fund tied to the S&P 500, which has a history of performing well long-term, is all they need. Moreover, productive assets like real estate and farms are also investments that Buffett favors because they generate significant cash and are tangible. Additionally, real estate can be a wise investment during a recession since the housing market will likely take a hit. This presents an opportunity for investors to purchase properties at discounted prices. As the economy recovers, property values may increase, which provides a potential return on investment. For number 4, diversify investment. We've talked about investing, but let's also not forget the importance of diversification. Diversification is crucial in building a successful investment portfolio as it helps spread your investments across various asset classes such as stocks, bonds, and real estate. This strategy protects your portfolio from volatility in any one market sector, minimizing risk and potentially increasing returns. Warren Buffett once emphasizes its importance, saying, "Diversification is protection against ignorance. It makes little sense if you know what you are doing." By diversifying your investments, you can safeguard your portfolio against market fluctuations and avoid putting all your eggs in one basket. This allows you to enjoy the benefits of different asset classes and capitalize on opportunities across various markets. Last but not the least, number 5, invest in yourself and become future-proof. Investing in yourself is crucial for long-term financial success. Remember these words from Warren Buffett. The best thing you can do is to be exceptionally good at something. People are going to give you some of what they produce in exchange for what you deliver. The best investment by far is anything that develops yourself and it's not taxed at all. To future-proof yourself, consider focusing on emerging technologies like artificial intelligence and blockchain, which are likely to have a significant impact on the job market. Developing skills in these areas can position you for success even during challenging economic times. There are plenty of opportunities to learn, whether it's taking online courses, attending workshops, or even starting your own side projects to gain experience. The more valuable your skills are, the more opportunities you will have for income generation and career advancement. Skills are inflation and recession-proof, and investing in yourself is the best investment you can make because it's not taxed at all. Don't wait. Invest in yourself today and watch your financial success grow. So what can we learn from this episode? A recession may seem like a difficult time to accumulate wealth, but with the right strategies, it can also present unique opportunities. By cutting back on expenses, building an emergency fund, and being disciplined with your finances, you can position yourself to take advantage of opportunities that arise during these times. As you move forward, it's essential to remember that building wealth during a recession is not a get-rich-quick scheme. It requires patience, discipline, and a willingness to take calculated risks. However, the rewards can be significant, both financially and personally. So if you're looking to get rich during a recession, start by examining your finances, setting financial goals, and taking steps to live below your means. Also, consider building an emergency fund to give yourself the financial security and flexibility you need to take advantage of opportunities when they arise. Remember, the road to wealth is a journey, not a destination. By being disciplined, focused, and persistent, you can build a solid financial foundation that will serve you well both during a recession and in the years to come. So, take action today and start building the wealth you deserve. If you found this video informative, don't forget to like and subscribe to our channel for more content about economics and finance. And as always, thank you for watching.